Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about DL Holdings Group Limited interim report. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand or sustain the business. DL Holdings Group Limited offers a diverse range of businesses and services across various sectors. At the core of their operations are financial services, which include licensed business activities such as securities trading and brokerage, margin financing, investment management and advisory, insurance brokerage, and equity pledge financing. In addition to financial services, the company provides money lending services, investment advisory, assets management, and referral services. They also offer enterprise solution services like global identity planning, wealth inheritance consultancy, and other business consultancy services. Furthermore, DL Holdings Group Limited is involved in property investment and the sale of apparel products. The company's supply chain management solutions business enables them to provide a comprehensive range of services to their clients. With operations in Hong Kong, Singapore, Japan, and the People's Republic of China, DL Holdings Group Limited has established itself as a significant player in the financial and business services sector. The stock price of DL Holdings GP has crashed by 62.84% in the past year due to a combination of negative market perceptions and underlying fundamental weaknesses. One major contributing factor was the company's discounted share placement and rights issue, which led to significant immediate drops in stock price. The issuance of zero-coupon convertible bonds also raised concerns among investors about potential future dilution and increased debt burden. The broader market volatility and concerns surrounding cryptocurrency-linked investments further exacerbated the negative sentiment towards DL Holdings GP. As a company involved in Bitcoin mining and digital assets, it was likely to be affected by these market anxieties. Furthermore, analyses highlighted ongoing fundamental weaknesses, including poor long-term growth rates, high debt levels, and weak financial health. These factors collectively created a vulnerable environment for the stock, amplifying the impact of negative news events. The company's inability to address its underlying financial issues and manage investor expectations has led to a significant decline in its stock price over the past year. The primary drivers of revenue growth in our company can be attributed to several key areas. Firstly, the provision of financial services by licensed businesses has seen a significant increase, with a notable 65.8% growth from HK$44,017 to HK$73,255. Additionally, family office services business has also experienced an uptick, contributing to overall revenue growth. Furthermore, the sale of apparel products with supply chain management has shown a 47.2% growth, indicating a strong performance in this area. Another significant driver of revenue growth is the provision of financial services by licensed businesses, which is expected to see an 81% increase in 2025. The company's financial services have also seen a substantial increase from external customers, with HK$75,617 and HK$26,820 respectively. Moreover, the company has experienced increases in revenue from commission and brokerage, arising on securities dealing, insurance brokerage services, and referral services for family office business. On the other hand, the primary drivers of revenue decline can be attributed to a few key areas. Firstly, money lending services have seen a decline in revenue, with a decrease of $1 million. Additionally, interest income from provision of margin financing services has declined by 46.9%. The company's service fee income from financial advisory services and investment management services has also decreased by 27% in 2025. Furthermore, the sale of apparel products has seen a significant decline, with no increase noted, and a revenue decrease of $1,800. Enterprise solutions have also experienced a substantial decline, with a revenue decrease of 60.3%. The loss on early termination of lease in 2024 may be a contributing factor to this decline. The company's financial performance underwent significant changes in terms of net income and profit margins. Notably, the net income saw a substantial increase of $194.2 million. However, this growth was not mirrored in the profit margins, which experienced a decline from approximately 75% to around 63.7%. The reasons behind these fluctuations are not explicitly stated, but it is mentioned that other gains contributed to the rise in net income, netting out at $30.9 million. The company is generating positive operating cash flow, as evident from the various summaries provided. On page 12, it is stated that the company generated $118,542 in cash from operations, indicating a positive inflow of funds. Furthermore, on page 75, the company's money lending services and enterprise solution services have contributed positively to its operating cash flow, with $5.4 million and $0.8 million respectively. This suggests that these business segments are generating sufficient cash to support the company's operations. Additionally, on page 25, it is reported that the company has an operating cash flow before working capital changes of $1,062, which is also a positive indicator of its ability to generate cash from its core operations. Overall, these summaries collectively indicate that the company is generating positive operating cash flow, which is a crucial aspect of its financial health and sustainability. The company's debt level has undergone significant changes in recent periods. Initially, the total debt level increased substantially from $90,008 to a high of $731,251. However, this was followed by a decrease to $11,960 as at 31 March 2025. Furthermore, bank borrowings also decreased from $72,601,000 to $22,560,000. In terms of interest expenses, there have been notable changes across different categories. Interest expenses on bank borrowing and promissory notes payables decreased during the reporting period. Conversely, interest expenses on bonds payable increased significantly by 138% from $1,373,000 to $3,265,000. The interest expenses on lease liabilities remained relatively stable throughout this period. Overall, while there have been fluctuations in the company's debt level and interest expenses, some categories have experienced significant changes. The recent analysis has revealed a mixed performance across various segments and regions. On the positive side, financial services have been a standout performer, with notable mentions on pages 24, 25, 74, and 77. Money lending services also showed impressive results, highlighted on pages 25 and 75. Additionally, enterprise solutions services demonstrated strong performance on page 75. On the other hand, some segments and regions have underperformed. The sale of apparel products has been a disappointment, with a mention on page 24. Furthermore, the apparel business as a whole has struggled, with references to its poor performance on pages 75 and 77. These areas will require attention and improvement to get back on track. Management is expressing a positive outlook for the company's future, driven by a strategic investment approach. In the short to medium term, the company aims to capitalize on opportunities that will yield returns through investments. A key example of this strategy is its involvement in the ultra-luxury real estate project, One Carmel, through a subsidiary. By increasing its stake in this project, management expects to benefit from future profit distributions and long-term capital appreciation. This investment is seen as a means to enhance the company's financial performance and create value for shareholders. The company's financial performance is reflected in its dividend payments. A notable example is the payment of a final dividend for the financial year ended 31 March 2024. This indicates that the company has prioritized returning value to its shareholders through dividends. In terms of specific figures, the company paid out $30,063 as a final dividend for the mentioned financial year. This demonstrates the company's commitment to rewarding its investors and distributing profits in a tangible manner. Concerns about inventory buildup or supply chain disruption have been raised due to several factors. The sale of apparel products with provision of supply chain management is expected to decrease in 2025, indicating potential issues with inventory levels and distribution networks. Furthermore, the apparel business segment has faced challenges in the global business environment and international trade conflicts, resulting in a profit of only $2,000 despite revenue increase. These factors suggest that there may be difficulties in managing supply chains and maintaining optimal inventory levels, which could have significant implications for businesses operating in this sector. That concludes the financial summary for DL Holdings Group Limited. Feel free to comment below, and I will be happy to answer them when possible.